So let's talk about these charts right here. Now here you can see the S&P, the Nasdaq, the US dollar, the Russell, the Dow Jones and Bitcoin. By Bitcoin I mean the crypto market. Now just from a glance you can clearly see what I have already demarcated here. Cup and handle patterns, or should I say inverse cup and handle patterns with a regular cup and handle pattern here. Now, before we continue, the price target of this cup and handle pattern on Bitcoin here is $5,000. I'm not the one saying it, the charts are saying it. So don't bother to come to the comments and be like, this guy's always bearish. That's what we can observe from here. However, the way cup and handle patterns usually work is by taking liquidity above the handle here. So zoomed in, you will see it like so. We have price here. It should come up here before going to the downside. The reason why it does that is because a lot of people would have shorted somewhere here because they saw this already as a cup and handle pattern. So they short here and they put their stop loss somewhere here. Of course, there is such a person called the market maker, and he needs to take what is he. Or in other words, he needs to take the opposite side of your trade, which is longing here. So usually, and I say usually because it's not certain, after an inverse cup and handle pattern, the price tends to go above the handle before plummeting. So in theory, we could go back up to here. We can see a similar thing happening with the dollar here. So if you erase this part, you would say that this was a cup and handle pattern. So this is the handle and this is the cup. So the price reached here and broke to the downside here. And from there, it took off to here. Now, by taking off to here, this right here became a double bottom. So immediately as the price breaks the neckline here, it confirms this double bottom. So usually, again, the price should meet with the price target of this double bottom. If that is to happen, then crypto still has to plummet, but not to 12K, as the price target is just somewhere here. Now, again, usually, when the price meets with this price target, it should retrace. Because when it left from here, it did not only trigger this price target, but it also triggered this price target. So if it does retrace somewhere here, that will pump the crypto markets and every other market up to here. Of course, these are just hypotheses, not financial advice. Now, these explanations have their own time frames in which I think they will play out. So they may not be immediate. If the dollar is to meet with the price target of this double bottom here, all markets will bleed. But not for long, as it's already close to that target. So what I see happening is it meets with that target and the markets bleed, and people will immediately think, oh, we are going to 12K, here we come. But to everyone's greatest surprise, the dollar dumps from there. When it does dump, the markets pump. When they pump, of course, people will also think we were here at this support for a very long time and it's about time for us to go to the all-time high. But no, we dump from here and we dump big time. Now, this is my hypothesis. It may not happen like I'm saying. It might, but it may not. So on the 29th of September 2008, the stock market fell by 777.68 points in intraday trading. It was, at the time, the biggest point drop in history. So the 29th of September here was a terrible day. The 29th of October in 1929 was also a terrible day. So humans act a lot by emotions. People like to seek what happened before. And these thoughts control their actions. Do not be surprised if this push which I'm talking about here does not come into effect. Because some people could anticipate that since the markets have been known to have crashes on the 29th of September, hypothetically they could sell off their riskier assets just to avoid the crash. That sell-off could lead to an accelerated decline here. So I am strongly considering both options. We are at support, so logically it is wise to be longing here. You don't want to be shorting at support, is what I mean. But this fear of us having another massive crash on the 29th could cause people to sell here. The only thing, however, that makes me have, say, some hope of us not immediately crashing from here is the S&P here. It closed the daily in a bullish engulfing pattern on support. So in a perfect world, it should be going up from here until here. However, again, as it closes the daily in a bullish engulfing pattern, the next day may not be so bullish. It may still drop before going up, which would give it like a hammer somewhere here. So just have that in mind. All right, this was a bit long, but see you in the next video.